5 high-yielding dividend stocks. It is no longer news that the stock market is generally experiencing a very tumultuous year. The Russian-Ukraine war, rising interest rates, and inflation are major factors that have led to the recession, which has spread its tentacles over all aspects of the stock market. With major corporations in a clear downtrend in this bear market, some high-yielding dividend stocks have the potential to turn your investment portfolio around. Our goal on this channel is crystal clear: to assist you in achieving financial independence so you can live your life as you choose. One way to accomplish this goal is to bring to your attention carefully researched and analyzed stocks in which you can invest. Our team has done a lot of market research, and in today's video, we will share with you our top 5 high-yielding dividend stocks that you can add to your investment portfolio. If you haven't subscribed yet to our channel, make sure to kindly annihilate the like and subscribe buttons. And if you're finding this content valuable, you'll want to stay till the end because we think you'll like the last stock the most. Now, let's get started. Simon Property Group. If you like real estate investment trusts, then you might already be familiar with Simon Property Group. As the largest owner of shopping malls in the United States, you have likely shopped in a mall owned by Simon Property Group. SPG boasts a revenue of about $5 billion over 3,300 employees, which means that SPG is a large cap company. For a company that thrives on the number of people that shop physically, the coronavirus led to a retail apocalypse as governments ordered people to stop gathering in groups. Although SPG saved for this rainy day by having roughly $9 billion in liquidity to cushion the effects of the pandemic, it still wasn't enough. SPG's stock price crashed from about $150 to around $48 during the peak of the COVID-19 pandemic in March 2020. By late October, the stock had rallied to about $170, the highest priced after the pandemic low. The stock is currently at around $118 after many highs and lows. SPG has a dividend yield of 5.6%, close to its 4-year average dividend yield of 6.1%. This makes SPG one of the retail companies with the highest dividend yields in 2022. The company has a dividend payout ratio of 116%, about 3% higher than the sector's median. Even with a very high dividend payout ratio, SPG appeared well poised to continue paying dividends to investors after 7 years of consecutive dividend payments. The coronavirus pandemic hampered the company's dividend growth, but it has now experienced 1 year of growth. It does not appear that SPG will stop paying dividends anytime soon. Over the past 9 years, Simon Property Group has recorded average earnings per share and dividend growth rates of 4.5% and 6.5% respectively. Over the next 5 years, we expect SPG to continue this positive growth, as our analysis shows an earnings per share growth rate of 3% and a dividend growth rate of 3%. Simon Property Group has also done well in its return on invested capital over the past 9 years. Of course, there was a reduction in its ROTC in 2020 to 3.9% due to the coronavirus pandemic, but it bounced back to 7.6% in 2021. SPG has an average ROTC of 6.3%. SPG has done well despite the rapid expansion of online shopping and other e-commerce options. One reason contributing to this stronghold is the company's strategic location. Currently, at around $117 a share, Simon Property has an annual dividend yield of about 6% and a total expected annual return over the next 5 years of 9.6% annually. With these metrics, it looks like SPG still has much more in stock for investors. Best Buy Co. You probably already know about Best Buy. Best Buy is an American multinational consumer electronics retailer where you can shop for your computers, appliances, cell phones, tech gadgets, and other electronics. With over 1,000 stores and 105,000 employees, Best Buy is a leading electronics retail company in the US and Canada. The company also offers tech repairs. Following the release of its fiscal report, BBY generated more than $50 billion in total revenue in 2022. Just like other retail stores, Best Buy wasn't exempt from the recession that followed the COVID-19 pandemic. In March 2020, the stock price dropped to just over $50, but it quickly experienced a reversal as the stay-at-home orders made more people buy and use electronics and gadgets more. In November 2021, the company experienced its best price rally since the COVID-19 pandemic with a price of around $136. The stock price is currently just over $70. What about the company's dividend yield? BBY's dividend yield is highly ranked in the computer and electronics retail industry. With a dividend yield of 4.1%, BBY has bested its average dividend yield over the last 5 years by over 80%. Pretty impressive, right? The company's dividend payout ratio is also around 50%, and its history has been one of consistently rising payouts over the years. BBY has consistently paid dividends for 17 years and has 11 years consistency of dividend payment growth. BBY has an annual dividend payout of about $3.50 per share. The stock generally grew over the last decade with an EPS growth rate of 10.3% and dividend growth rate of 20.4% in this period. Based on our conservative estimates, BBY is estimated to grow its dividend at the rate of 6% per annum, while EPS is expected to have a growth rate of 4% annually in the next 5 years. Another impressive stat is the company's return on capital history, which increased from 9.1% to 49.1% in 9 years. The stock has a 22% average ROIC over the same period. Just few stocks in the market today can boast of this return. After careful analysis and research, few stocks in the market today can boast of Best Buy's high dividend potential on a long-term basis. The stock is attractive to value and dividend growth investors due to its high dividend yield and privileged position within the industry, being a leader in the sector. Although BBY stock might not be the most profitable stock out there, it appears to offer exciting opportunities which might prompt you to further research about the stock's prospect. Currently priced at around $81 per share and with an estimated 5% annual return over the next 5 years, now might be the time to consider this stock. AT&T Inc. Moving on from real estate and retail electronics, AT&T makes the third of our top 5 high-yielding dividend stocks. AT&T is the world's largest telecommunications company by revenue and the third largest mobile telephone service provider in the United States. With a revenue of over $168 billion in 2022, the company is one of the largest corporations in the U.S. The company specializes in satellite television, fixed-line telephones, the internet, and mobile telephones. As the foremost telephone service provider whose history dates back to Alexander Graham Bell in the late 1800s, AT&T is undoubtedly a prominent and well-known brand when it comes to telecommunication in the U.S. The pandemic also led to a massive stock price decline, with a 24% decline between March 9th and March 24th, 2020. By March 29th, 2020, AT&T was already trading at around $17. The stock price rallied to about $24 in September 2021. Since then, the stock has struggled to reach the heights it reached before the pandemic. Currently, AT&T trades at around $19. After trading at around $14 in October, AT&T has recently seen a massive resurgence and reversal, with a rise in its guidance and almost a 10% rally in price. Assurances from the company's CEO also mean that the company is doing its best to keep this uptrend and impress investors. The company's dividend yield is not bad, considering the bearishness the stock has been experiencing in recent months. At around 5.9%, AT&T is a little better than its 5-year average dividend yield of about 5.4%. AT&T has a payout ratio of around 41%, a very decent ratio. Even though AT&T has paid dividends consistently over 38 years, it has a poor dividend growth rate, as there have been inconsistencies in the number of dividends paid to investors without constant increments. Can AT&T continue to pay dividends to shareholders? Yes. Even though dividend growth has been slow, our analysts predict the dividends continue growing. The company has had an average EPS growth rate of 1% and a dividend growth rate of -5% over the last decade. However, our analysis shows that things can improve with a projection of an average EPS and dividend growth rate of 2% over the next 5 years. AT&T has an average return on total capital of about 5.5%. However, the ROIC has not been constant over the years. During the pandemic in 2020, the company experienced a negative ROIC of -1.5%. The company looks to have recovered, with an ROIC of 5.8% currently. It's also worth noting that the company's stocks have an annual dividend yield of around 6%. With this in sight, AT&T is a high-yielding dividend stock that might be considered for long-term investment. According to our model, over the next 5 years, the stock could have a total annual return of 12.4%, led by a 6% dividend yield and a 2% EPS and dividend growth rate. British American Tobacco. British American Tobacco is a British company that manufactures and sells cigarettes, tobacco, and other nicotine products. Based on total revenue and net sales, British American Tobacco is the largest tobacco company in the world. Although headquartered in London, British American Tobacco can be traded by Americans through the NYSE under the ticker BTI, which triggers no withholding tax for American investors. With operations in over 180 countries, British American Tobacco brands are all around us, as the company controls major global cigarette brands including Dunhill, Kent, Benson & Hedges, Kool, Lucky Strike, Rothmans, and Pall Mall. In 2020, the company announced that the coronavirus pandemic had not affected its business. However, the company acknowledged that there had been a reduction in consumer demand for cigarettes. During the pandemic's peak, BTI saw a sharp decline in its stock price to around $30. However, the stock quickly rebounded, maintaining a steady price range of about $40 before achieving a peak of about $46 in February 2022. The stock is currently priced at around $41. Despite the recent environmental and anti-tobacco sentiments engulfing the industry, BTI has experienced a 5% growth in the last 5 years, with the focus shifting to next-generation tobacco products made from vapor and tobacco heating. BTI's dividend yield remains impressive at a stable 6.7%, just below its 5-year average of 7.2%. The stock has a dividend payout ratio of around 48% and has had a consistent history of paying dividends over the past 12 years. However, the dividend has only grown consistently for 3 years. BTI's dividend and EPS growth rates over the last 9 years stood at 4.3% and 2.4% respectively. Going forward, we expect the dividend growth rate to be 3% over the next 5 years, the same rate at which the EPS growth rate is projected to grow too. Over the last decade, the company's return on invested capital has been oddly declining while remaining profitable. In 2012, the stock had an ROIC of 20.5%. Over time, the value declined, with 2022 expected to have an ROIC of 6.4%. The average annual ROIC of BTI stock, however, stands at 17.4%. However, with BTI being one of the frontrunners in smokeless tobacco, this disruption might see a change in fortune for the stock, as our model suggests that BTI is a viable long-term investment. BTI currently has an annual dividend return of about 7%, and over the next 5 years, our model estimates BTI stock will have a total annual return of 9%. Verizon Communications. Verizon is an American wireless network operator that offers wireless products and services such as mobile telephony and wireless broadband. The company generates about 90% of its revenue from its wireless services and 10% from its broadband services. The company is the largest wireless carrier in the U.S., as it is one of the frontrunners for the 5G network and has over 142.8 million subscribers. Verizon was in a safer spot than its competitors like AT&T and T-Mobile during the COVID-19 pandemic due to the company majoring on wireless communications. However, it did not make Verizon immune to the biting effect of the pandemic. During the coronavirus season in 2020, the company's stock dropped to around $50, almost a 20% decline from its high before the pandemic started. In November 2020, the stock rallied to a peak of about $61. Since then, Verizon's stock has continued to plummet. Currently, the stock is priced at around $38. The dividend yield on Verizon is 6.6%, a very high yield compared to its competitors in the telecommunications industry. The stock's average dividend yield over 4 years is 4.6%, which means the current dividend yield is about 36% more than the stock's average over 4 years. The dividend payout ratio is about 50%, with a strong history of dividend payments and growth. With 22 consecutive years of dividend payments and 18 consecutive years of dividend growth, Verizon has one of the best records of dividend raises in the telecommunications industry. Verizon has an EPS growth rate of 9.3% over the past 9 years and a dividend per share ratio of 2.9% over the same timeframe. This rate is expected to increase by 4% and 2% annually for EPS and DPS respectively over the next 5 years. The stock's return on invested capital looks pretty good, but it is still waiting to replicate its 2017 ROIC success of more than 20%. Presently, the stock has an ROIC of 9.9% annually and a dividend return rate at 6% per annum. With its current price of around $39, Verizon is our favorite dividend stock out of these 5 high-yielding dividend stocks, with a whopping 16.3% annual total return on your investment in the next 5 years. Per our conservative research and analysis, our model suggests that Verizon might be the high-yielding dividend stock for your long-term investment portfolio. Don't forget to also do your research and due diligence on this stock as well. We have come to the end of our video on high-yielding dividend stocks. Which of these stocks interests you the most? You can share it below in the comments section. If you like this video, kindly destroy the like and subscribe buttons. We hope you have an awesome day.